Canadian dollar spiking to a 3-month high after that second straight month of blowout jobs numbers from StatsCan. Our next guest sees the Bank of Canada hiking this month and the loonie getting stronger against the greenback by month end. Joining us for more on our top line story is Adam Button, Chief Currency Analyst at ForexLive. Thanks for joining us, Adam.
Pleasure.
All right, so the market's definitely pricing in a greater chance now of a rate hike on January 17th, about 80% odds. You think this is a done deal for January?
I mean, you look at the Bank of Canada and they walked back the caution that they had in the December statement, got about 75,000 jobs in November, another 78,000 today. If there was ever a case for hiking rates, I think it's now. The economy looks to be picking up. The Bank of Canada is on a rate hiking path. So let's do it in January, and then I think from there we're back off balance with what the Bank of Canada wants to do.
When you look at those kind of numbers, the number of jobs that were added not only in December but for the year, the unemployment rate down at that low that we haven't seen since the mid-70s. All things being equal, the way we used to think about central banks in the economy, we'd say there's no need for a 1% rate. That's almost an emergency rate. The economy doesn't need it in terms of its growth, or the labor market doesn't need it, but in the past 10 years, we've run up a lot of debt. How much does Governor Poloz have to worry when he looks at raising rates, saying, you know what, can Canadians actually handle higher rates?
Right. We're in a whole new world since we've had higher rates. It's been over 10 years since rates were at, quote unquote, normal levels, and we just don't know how consumers are going to behave when they're suddenly paying a little bit more on their mortgage. How leveraged up is everyone? And I think the Bank of Canada has wanted to see what's going to happen, and I think they continue to want to see how consumers are going to behave. And the risk is that people really can't afford higher mortgage rates, especially in places like Toronto, Vancouver, where everybody's levered right up, credit cards jacked up. But wages are going up. Jobs are plentiful. At some point, the Bank of Canada has to respond just because they want to get some breathing room above zero.
Add some breathing room, some dry powder, because we're very long in the tooth for this recovery. There's going to be another recession. We know that economies move in cycles, but at the same time, you're talking about inflation. This is key for them. They keep saying, don't worry, we're going to make that 2% sweet spot for our core metrics. It's a slow grind to get there. But you said wages are on the increase, so we're starting to see those signs that we're probably going to get there. And is there a danger that the Bank of Canada falls behind if they don't start getting aggressive?
Right. This is the global puzzle that we're in right now. There should have been inflation already. I mean, we're waking up to newspaper headlines tomorrow, lowest unemployment rate, of my lifetime. The wages should be higher, and it's the same in Canada. You go to China, or same around the world. You go to China, where the economy's booming, 7%. There's no inflation there. There's no inflation anywhere. And I think central banks are about to be divided into two categories: ones who believe it's coming and are going to act as if it's coming, and ones who want to wait and see and not act before it comes, like Europe and in Japan. And I think Canada is shifting to the side where they say, you know what, it's coming, we believe it's coming, we believe in our forecasts. But the forecasts have been wrong so many times before. We're in this globalized age of deflationary pressures. So maybe when Canadian employers are faced with wage hikes or people asking for wages, they say, you know what, let's just offshore it. And that's the next big trend, and the inflation doesn't materialize. So that's the big risk we're facing right now about what happens next, because this is the recovery. I don't think we're at the end of the cycle. We're at the apex of the cycle. These are the good times we're in. And I think stock markets are absolutely reflecting that. And even currencies are reflecting that. It was a good year in the U.S., and the Canadian dollar blew it away anyway.
To that point, these are the good times that we are in, but nobody seems to want to believe it. We do a poll on the BNN website. I took a quick look at it and basically saying, when you look at the jobs numbers today, do you believe that they reflect an economy as strong as the numbers suggest? And the overwhelming number of respondents basically said no. They don't think the economy is doing as well as all the data suggests. Why is there's this disconnect out there?
It's crazy. It's this 10-year hangover, right? This anger and fear and disappointment. I mean, why would you elect Donald Trump if you weren't angry? It's out there, but if you look around, you look at people, everybody's doing pretty well. I think Canadians, especially even more so than Americans, are richer than they've ever been before. Now, they might be spending more than they have before, which speaks to the household debt question, but this is really a great time to be in Canada. The Canadian economy is going to do very well this year, and the risks are on the upside. And I think the Bank of Canada is going to start to embrace that, and central banks around the world are going to embrace that. And really, when you look at a survey like that, when people are still cautious, that means we're not yet at the top. The things can still get better. It's when everybody is feeling good about things that you have to step back.
All right, so if we get the bank embracing that, that should be supportive of our currency. We're back above 80 cents now. This is the question we get on Market Call, our call-in show all the time, especially in the past. We have people saying, is this a good time for me to buy U.S. bucks with Canadian bucks? And of course, they're looking at a loonie north of 80 cents. Can they expect it to stay there for much longer?
Yeah, I think. I mean, everybody's headed to Florida right now. I mean, if they're, God bless the people.
They want to get out of the extreme cold and just get into a little bit of mild cold.
Yeah, that's right. I mean, this is a good time to do it. I think the Canadian dollar, though, will rally through month end. If you can hold off and wait, I think the Canadian dollar has a lot left in it. I think that the Bank of Canada is going to take a decided shift to the hawkish side. Oil prices are higher. The spread between Canadian and U.S. oil is going to narrow. Commodity prices can move much higher from here. Everything is lining up for Canada. Now, there's some NAFTA concerns, there's some housing concerns, but I think, we're probably past the worst of that, and I think Canada's sailed through and will sail through NAFTA as well. And, the coast is clear from here on out.
Lastly, I want to ask you, there have been some people, including Benjamin Tal over CIBC, who suggest that Governor Polas has an agenda. The agenda is a lower loonie. If he gets hawkish, the loonie goes higher. Is this in the back of his mind?
I think Polas has a different agenda, and right now he's trying to form some sort of legacy. I watched The Crown, the TV show The Crown, over the holidays, and there was a great scene, and it was the Queen talking with the Prime Minister, and he was resigning because he had gone to war in this failed war. And she said to him, "You're an ambitious man. You wanted to carve out your own legacy." And Polas is coming to the end of his term, and he doesn't want to just have in his obituary, he cut rates a couple times, he hiked rates a couple times. He's trying to do something, and he's trying to position himself as this unpredictable central banker, and he sees some kind of value in that. So the risk is that he goes out in January or beyond and just torpedoes markets, whether it's for the Canadian dollar or for some other reason. He seems to see this value in uncertainty, and it's a huge flaw for Polas and a big risk. But at the same time, I don't think he'll surprise markets again. I think he wants to be the guy who surprises markets, but I don't think he'll have the guts to do it. And if he wants to do it, he'll send a signal before. If he wants to leave rates on hold, he'll send that signal between now and January 17th.
Very fascinating stuff. Thanks for coming in, Adam. That was Adam Button, Chief Currency Analyst at ForexLive.